They think. We all learned in like Psych 101 or wherever, a stimulus response, right? We have five senses, we get stimulated, we have a response. It's actually not true. We predict everything. Like the cutting edge of neuroscience is everything's a prediction. And it's based on everything we've ever experienced. Like you're predicting my next word. Well, you know the English language. You know I'm talking about psychology. You know we're talking about emotion. So you're using all those things you do know about the situation and thinking she's probably going to say this. That's fairly well accepted at this point. The more important part is the prediction is actually about, is this good or bad for me? So let's suppose somebody's listening and they've been absolutely committed to taking the emotion out of their options trading. My speaking is a little bit threatening. Like they're predicting, this can't be bad for me. Do I have it wrong? And actually then the walls kind of go up and you kind of resist hearing that thing that is different than your belief set, if you will. Well, you can take this one idea. We are always predicting a future emotional state.
Hello, Wealth Builders. You're listening to Wealth Building with Options. Here's your host, Dan Passarelli.
Hello, Wealth Building family. We have a really, really great show planned for today. We have a very, very special guest that I want to tell you a little bit about. Our guest today was finishing her master's degree in neuropsychoanalysis at the University of Chicago when her CBOE floor trading buddies went upstairs to one of the first long-short equity trading firms. They convinced her to come with them, and soon she was trading at Schoenfeld, sitting next to the now legendary Dmitry Balanasi. A few years later, she moved to New York City to run a day trading desk during the internet boom. In 2003, a psychoanalytic journal published her master's thesis, and she showed how the science was revealing that all decisions require an emotion. She started talking about this neuroscience finding, and people wanted to know more. In the interim 20 plus years, she's been featured in all sorts of financial media and has worked with all sorts of hedge fund founders, portfolio managers, traders, and investors across the globe. In 2015, Billions used her story and her book, Market Mind Games, as the basis for the Wendy Rhoades character on Billions. Please welcome Denise Shull.
Dan, thanks for having me. Happy to be here.
Yeah, I am super excited about today's show. You have got just a wealth of knowledge. You've been on both sides, been a trader, been really on the psychology side of what traders do and how they think. I think this is going to be great.
I will do my best.
Okay, so Denise, you have this extensive history in trading. What was it that led you, I guess, back to your pretty amazing transition from an impressive career as a trader to becoming one of the top experts in the world on trader psychology? Tell us about that journey.
I think it starts with the fact that literally I grew up as an only child. I had a lot of time to think, and I always was like, why do they do that? Why do they act like that? Why do they behave like that? Which ultimately landed me in this graduate program, you say neuropsychoanalysis. That just means human beings have an subconscious, unconscious. We all know that we have things that influence us, that afterwards we go, oh my gosh, I didn't realize that thing was influencing us. Well, I just wanted to figure out how that could happen, like neurons and synapses and how we could have a subconscious. And the truth is I was dating a floor trader. And he kept telling me I'd be a good trader. And I kept like going, in fact, he wanted me to buy a weather futures seat on the board of trade in, I don't know what year that was, 92 or something. And I was like, weather, future, see, do not compute. In any event, so as I was trying to figure out if I was going to get a PhD in, being a therapist or a researcher, he and some of his SIBO buddies went upstairs to a firm that was called the Electronic Trading Group, actually started by an options guy out of Chicago named Bob, and I can't think of Bob's last name right now. In any event, they're like, oh, come with us. You're just trying to get something master's thesis. We need someone to keep track of our P&L intraday. Because at that time you got quotes, but not live P&L. And we'll teach you to trade. So sure enough, in a few months, I was trading my own account. They were on their own for the P&L. And then I realized the markets made sense to me from a momentum perspective. I could see that groups of stocks would move together. Like there'd be news about Pfizer and Lilly and Sharing Cloud, which were some of the drug stocks back then, would all move. And I'd be like, that's really interesting. And then I heard that Schoenfeld was trading that way. So I went there to learn it from their perspective. And then I got invited to run a desk in New York. Basically, this market maker just wanted a day trading desk. And so the whole PhD thing went by the wayside until this little institute wanted to publish my paper. And I thought, okay, you guys, it's really old. You're going to sound really silly, but I'll update it because it'll be cool to have my master's paper published in like the journal that has 12 readers. And so lo and behold, Antonio Damasio, who's written a popular book, by the way, called Descartes' Error. Anybody can read Descartes' Error. Descartes said, I think, therefore I am. The point of Damasio's book is it's really, I feel, therefore I am. He had shown how people who were brain damaged in certain ways couldn't make the simplest of decisions. And basically, if you think about it, you walk up to a vending machine, which is one of the experiments. Do you want a Reese's cup or peanut M&Ms? And what you do is you go, I think that'll taste better. That'll feel better. I'll be more satisfied. Or maybe, you go, that'll be less calories or whatever, you buy the cheese strips. And if you don't have that sort of feeling about what's right, you can't decide. So in short, I was trading at a prop firm at that point, and I just started talking about it, and people started asking more. In 21 or 2 years later, here we are.
Wow. Geez Louise. That's pretty crazy. Interesting how, serendipitous life can be, I guess, huh?
Clearly meant to be. Like when I look at literally my whole arc of my whole life, I don't know exactly how, but like I was meant to be doing this.
Well, okay. So something that I find really interesting is something you say in your book is that you say emotions are information, not noise, which felt signals or whatever, if you will, like tight chest or buzzing excitement or whatever, have you seen correlate with better trades versus sabotage when selling option premium or something?
Well, the first thing I'm going to say is I'm going to step back. The world's had this idea, take the emotion out of it, control the emotion, just be rational, just use your intellect, your cognition, your probabilities. But the reason we think that emotion is the problem is because we don't see that like you can feel anything and not act on it. But when you look, it looks like people feel something and they act on it. They feel something and they act on it. And they do because they don't know how to like go, why am I feeling that way? At its core, how we feel, and I would include like a sense of something, a feeling, an emotion, and that's kind of a spectrum of intensity, if you will. You have an inkling, or you have a little bit of a feeling, or you have a really strong feeling. Those are all bodily experiences. They generally fall into two categories. They either are about your perception of what something means to you, and we'll get into this, but your prediction what it's going to mean to you, or they are about the situation at hand, the trade, the market, or whatever, any other decision, what you're going to order on the menu. Will the halibut be satisfying enough? So the problem is we thought that emotion is the problem the way we used to think the world was flat because you stand at the beach and like it looks like you fall off the end, right? So it looks like emotion is the problem, but it's really that we just haven't known how to deal with it. Like we haven't understood how the whole human psyche, meaning mind and body, uses those senses, feelings, and emotions to get our attention to something that could help us. So we've just had this totally skewed understanding of it, like the world's flat. And so therefore, like our strategies have been wrong. So what we now know is, yes, every decision includes emotion. Furthermore, every perception is actually a prediction. So like right at this very moment, you, and then when you post this, as people are listening to me, they are actually predicting my next word. They think, we all learned in like Psych 101 or wherever, stimulus response, right? We have 5 senses, we get stimulated, we have a response. It's actually not true. We predict everything. Like the cutting edge of neuroscience is everything's a prediction. And it's based on everything we've ever experienced. Like you're predicting my next word. Well, you know the English language. You know I'm talking about psychology. You know we're talking about emotion. So you're using all those things you do know about this situation and thinking she's probably going to say this. That's fairly well accepted at this point. The more important part is the prediction is actually about, is this good or bad for me? So let's suppose somebody's listening and they've been absolutely committed to taking the emotion out of their options trading. My speaking is a little bit threatening. Like they're predicting, this can't be bad for me. Do I have it wrong? And actually then the walls kind of go up and you kind of resist hearing that thing that is different than your belief set, if you will. Well, you can take this one idea. We are always predicting a future emotional state. Is something good or bad for me? Am I going to feel good or bad? It's called anticipatory affect. The guy who I think is the center of the research is a guy named Brian Knudsen at Stanford. He has shown how every level of the brain, from the brainstem to the frontal cortex, is executing on anticipatory affect. Well, from any point of view, but from a trading point of view, the skill, therefore, to learn is I have all these feelings, some of which are noise, some of which are information. The noise is really the stuff about you. How do you expect to be treated? How much money do you think is right to make? Self-image related things that have nothing to do with what that price is doing. Mm-hmm. So the skill is to go, okay, I have this whole set of feelings, senses, feelings, emotions. Which ones are about me? And which ones are a result of all of the training I've done in trading? All of my market expertise. So Jennifer Lerner of Harvard calls the feelings about the trade your integral emotions, and the feelings about yourself your incidental emotions. So on a daily basis, I talk mostly to portfolio managers and hedge funds. And basically, I'm always trying to get them to realize which feelings they have are about themselves and which feelings are about the trade. And it's like learning a sport that you never played because, you were told you were specifically not to play this sport, that would be really bad. So depending on how much you integrated that control, take the emotion out of it, it'll be more or less easy to learn like this sport of really emotional awareness, emotions as information, which, by the way, sense, feeling, emotion, that means the more you're open to that, the more you can recognize your intuition. And intuition is a valid form of knowledge. People can call it intuition. They can call it all kinds of things. It's been shown in experiment after experiment after experiment. One I like to use with my clients is, are they grilling steaks for their family? And how do they know when to take them off the grill? Because research shows an expert chef will know how well a steak is done by sight. My husband uses a meat thermometer. But I had a client actually experiment with this. 20 years running a commodities desk, big hedge fund, trying to learn how to trade, use his intuition. Well, trust his intuition more. Because there's the sort of be aware of it, and then there's the trust it. And I'm like, it was Labor Day weekend. I'm like, you're probably grilling steaks this weekend at your beach house. Yes. Okay, well, let's see if you can do it by sight. He came back and said he did it. So there's all kinds. There's one sentence from a research, I'm going to get it slightly wrong, but it's like intuition is most useful in fast-paced probability tasks. Exactly the opposite of what we would think, right?
Mm-hmm.
Anyway, so there's just this whole realm of visceral intelligence, signals we get below our chin, essentially, in our chest, in our stomach, that are sense, feeling, or emotion. And they're actually giving us information and at their core, trying to help us. But we've been taught the mind is flat, like the earth is flat. And if we try to use them or sail, we're going to fall off the edge.
Okay. There's kind of a lot to unpack here. You're blowing my mind here. So,
Sorry, I tend to, but I wanted to like get the whole point.
yeah.
We have these physical signals, they have information and they have noise in them. Trick is to know which is which.
Yeah. So, how is what you're saying different from the amateur traders saying, oh man, I feel good about this trade? Or is there any difference?
Well, we don't know unless we know that person.
Huh, okay.
So there's been research that shows inexperienced people watching markets, some of them are reasonably good at predicting short-term price action.
Hmm.
The reason why is at its core, the market's a social construction, right? It's people buying and selling that affect the price going up or down, right? And even though there's all those algorithms out there, they're all driven by human beings somewhere way back in the chain, right? So there's been great research shows that people who are using what's called theory of mind, I have a theory of your mind. For example, like your eyes just went to the left. So I know you're thinking about it. So that's my theory. He's thinking about what I'm saying. That's called theory of mind. Like I have a theory of your mind. Well, there's research that shows traders, portfolio managers who use the theory of mind skills that all human beings have are better at predicting price. Well, why? Because it is really human beings behind those dancing numbers. Some of my best portfolio managers, they will do oodles of fundamental work, then chart work, and then they'll say, where's everyone else positioned? If I think everyone else is already long, I may have every reason in the world to buy it, but I'm going to wait until it sells off a little bit because who's going to buy it after me? That's the question you're asking. Who's going to buy it after me? Who's going to sell it after me in order to... So in any event, the question was amateur trader, I have a feeling. Some amateur traders could do that. And if you think about it, even me, like why did Don and Chris and Steve think that I would be a good trader? Because they saw I had like a theory. They knew I had a theory of mind. And why did I notice that the drug stocks all moved together when I'd only been doing it 2 or 3 months? And the guy that ran, Bob, whatever his name was, said to me, you have the best instincts I've ever seen. And I didn't think a woman could trade. I'm like, Bob, is that a compliment or not? Because it's a little unclear. But anyway, the point is, why did I? Bob and I had a good relationship. I literally said, is that a compliment? But why did I have those instincts? Because I did have more developed probably theory of mind because I've been sitting around since I was a little girl as an only child thinking about why do people do what they do. So it's possible, in a way I'm getting off track. It's possible that an amateur could have true intuition. It's unlikely, and it's more likely that the more experience you have, the more possibility you have intuition. True intuition, which is unconscious pattern recognition, which is based on everything you've ever learned for the most part. That's how the chef can do the steak because they've been cooking, they've cooked 100,000 steaks in their life or whatever. Or what do they tell athletes? Play, don't think. Mm-hmm. It's like use everything that your body knows and just do it, but don't get too in your head. For the average person though, I have a lovely client. This is a lovely person. He runs a hedge fund in Asia. He's 55-ish. He's had a very successful career. Now, 40 people who work for him. He started working with me 2 years ago to how do I listen to my intuition? How do I still trade well now that I have 40 people working for me? And in trading well, how do I listen to my intuition? And he is very in his head, very probabilistic. And we just work on it little by little. He will bring a scenario to me and really end up saying, is the way I feel about this because I want to make money on this trade, or does the trade sound really true. I get a lot of that from my clients after they know me for a long time. They want to know if I think they're listening to their feelings about the market or listening to their feelings about themselves. Anyway, all human beings have intuition. You have more about something you know a lot about. That was a very long-winded way of answering that question, but
I like it though. It inspires more questions from me.
good.
So, and I don't even know if this is a valid question, but do you have a recommendation for some sort of method to blend traditional trader logic math with trader intuition or
Yeah.
yeah, okay.
So what everyone's doing, even though they don't realize it, they're like using whatever method of analysis they have, right? And then they are subconsciously or unconsciously saying, how much do I believe it? They actually are judging their confidence in their analysis. They may know it or not. There may be, all kinds of people say, take every trade, that fits your system. But the human being cannot stop or avoid that. I've done my work. What do I really think about it? If I'm going to take this trade, will it work out well for me? You can't stop that from happening. The human brain is predicting whether this thing is going to be good or bad for you every moment of every day. So the trick is just to make it conscious, to make it part of your process. So one thing I do with my clients is I will have them build, you can call it a confidence scale, a conviction scale, but basically a 1 to 7 scale that ranks something like panic or terror to something like overconfidence. And 1 and 7 are kind of easy. Panic, terrified, and 7 is like overconfident. And the ones in the middle get harder. I have them build the scale, number 1, to get comfortable with the idea and the words related to these different feeling states, subjective states. Just even, for some people, it's like familiarize yourself with the word trepidation. Like, you can't see this article really, but this is an Olympic athlete who I helped win 2 gold medals. And we did this with her, and she came up with the word trepidation. But the reason I do it is because there's research that says the more granular and differentiated you can be about your emotions, the more information you can get, as well as the less chance you just act on them. So if a person builds a scale and they get used to the idea of like, I will often now say, I'm concerned instead of I'm afraid. Because lots of times, like, I'm concerned about something. I'm not actually afraid. I'm just like, is that an issue? That's being more granular in the realm of fear or anxiety. And there's a good number of studies around traders who can be more granular, that they make more money and they last longer. It actually starts with awareness of your body. Like, can you feel your heart beating? Can you feel your stomach growling? And then people who are better at that, which is called interoception, are usually better at knowing, like, am I worried, concerned, terrified, afraid, like anxious, trepidatious? So what that does is it gives you a way, like, you do your analysis, you think about the trade, you go, how do I really feel? Because that's what I want people to do. What am I feeling and why? So if you have this scale that you kind of built for yourself, you can do, I'm a 4, which is I'm neutral, for example. And then go, why am I neutral? What would change that? So you're doing this reciprocal, using your intellect to think about the factors in the trade, and then focusing on yourself and going, what is my body telling me about that? And back and forth, knowing that you need to realize in what your body's saying, there are feelings about yourself. And go, you know what? The feeling about like my P&L has nothing to do with what like NVIDIA is going to do this afternoon. Right? But people just don't know they're supposed to do this. And what generally happens is once someone understands this and starts to try to do it, it almost immediately helps them, because you are like literally working with the human psyche the way it actually works, as opposed to fighting it. But it's still a skill. Like, you're swimming downstream instead of upstream.
Yeah. Now, okay, so this might be, I could probably be totally way off base on this question, but I wonder, Well, first of all, I wonder if I am. How does the positive attitude versus negative attitude
Mm, mm.
manifesting, how does that play into this, or does it at all?
One of my favorite books is written by a guy named Todd Kashdan in 2015, and he's got a co-author, very hard name to say. The title is The Upside of Your Dark Side.
Mhm.
And it says you can get the first 80% of performance out of optimism and confidence. But you want that last 20%? You need to be able to leverage your fear, frustration, disappointment, anger. Yeah. I have a client that owns a hedge fund and a sports team. Won't say his name, but people can probably put two and two together. I recently told him his team needs this book. What also happens, like I actually have an issue with toxic positivity, and you have to feel confident, you have to feel optimistic. And let's just take the athlete, the professional athlete who knows they're really good and makes a mistake and blows a game. They feel like crap, right? They feel bad about themselves. They doubt themselves. They let their teammates down. And then the sports psychologist comes in and goes, you have to get over that. You have to just be confident and you have to not feel bad. Well, that intellectual directive doesn't make the person feel any better, right? It doesn't. It never really does. And maybe for a second they feel a little less worse, right? But they're still like, why did I do that? They regret it. So instead of being able to sit with the regret and go, how did I make that mistake? Am I not being fast enough? Am I whatever? Instead of regret's meant to make you look at a situation and go, how should I have done that differently so that it doesn't happen again? But if the sports psychologist in this story doesn't let you do that, number one, you miss the information. But number two, you actually have the problem of you never get to work out the mistake, and you have to feel bad about yourself that you still feel bad. There's something wrong with me because this is the core of slumps. By the way, people think like they make a mistake, they lose a bunch of money in the market, let's say, but it doesn't matter. You drop the baseball, you drop the football. The feelings you have are meant to help you sort out how you could have handled it differently. And what happens is when people lean into the feelings, they'll get to the point where I should have done this differently, and the negative, unpleasant feeling will go away. That's an example of how a negative feeling actually helps you. But if you're not allowed to have it, you don't go through the process of what you should have done differently, and you feel worse because you're not supposed to feel bad. So you have like a second really intractable problem. However, if you just go, you know what, all my feelings are information. Some of them are going to be exaggerated and distorted because they're about me. A common one in athletes and in even professional portfolio managers is, have I lost it? And the athlete, it's, am I getting too old? Right? But in the portfolio manager, it's, have the markets changed? Everybody does this. Usually that's not the answer. The answer is usually like you could have or should have done something differently. But when you sit with a negative feeling, you can find out that information. And then what happens is you actually resolve it. Like you go, okay, I should have done this. Okay, I made a mistake. It's not fatal. If it's baseball, I have, 123 more games. If it's options, I have 400,000 more trades I could do. And then what happens is you feel better and you feel more confident and optimistic, and it's authentic. It's like real because you created it as opposed to, I'm supposed to be confident and optimistic. And the flip side of that, by the way, is when you have the negative feelings and you don't process them such that you like work through it and feel better on your own without like your intellect, is you don't act them out. The reason anyone goes into a slump is they are acting out the feeling left over from the first mistake. You want to solve any slump, anywhere, anytime, trader, athlete, I don't care. Go back to when it started and go, have the person like go, okay, I did this, this, and this. That blew the game, that blew the trade, that blew the year, that whatever. I feel badly about that. Okay. Why do I feel badly? What could I have done differently? And when a person does that, they get back to what they're capable of doing, as opposed to they try to set all those feelings aside because they're supposed to be positive and optimistic. They just act those feelings out then. They demonstrate them. They show poor judgment. They're slower off the base. We're back to the emotion. If we don't know what we feel, we act on it, basically.
So,
Sorry.
no,
I feel like I'm overwhelming you. Fire hose.
My mind is just really going in directions here. So, talking about emotions and feeling and body sensations, I guess, for lack of a better
word. Yeah, that's right.
And talking about you have to go through it on your own. A lot of this kind of reminds me of somatic experiencing, like Peter Levine type work. There's some other people who wrote some things on this. Is that sort of related here? This body?
Yes.
Oh, okay.
There's sensations that occur for the most part below your chin. So they are somatic. I mean, that's our word for the body, right? Soma. Visceral, another word.
Mm-hmm.
And there, George Soros is supposedly famous for saying he had a pain in his back when something was going wrong. Different people experience it different ways. And we have different levels of awareness. That's probably the more important part. Now that I have been doing this for so long, I just know to trust it. Like if I just have this sense of something, I don't even question it. Like right now, like I'm a long-term holder in Bitcoin. Okay, so it's down to 90,000, 91,000 from 125. I'm hoping it doesn't turn out to be like a complete scam and fraud. Maybe it will, and then that money's going away, and that'll be bad, and I won't like that. But aside from that problem, and I'm concerned about that, I'm not terrified or panicked. I'm just, I told my husband I'm a little concerned about that.
So, are there things that we can notice about our own body cues that might be helpful in preventing like revenge trading or knee-jerk reactions or things like that? Or that?
Well, yes. The question is for any given individual, how do you have the pathways to know? What I tell people who golf is ultimately being able to do this is like knowing, are you twisting your hand a little bit in a golf swing? It's a very subtle difference, right? It seems the same, but you didn't turn your hips as much or whatever. But what I tell people is start outside of trading. Start like on Saturday morning when you decide to go to Home Depot and then go, why did I do this? Because there's so damn much traffic, excuse me. Or the lines are so like, why didn't I come on Sunday morning or Saturday afternoon? Start outside in, relatively innocuous circumstances and see if you just go, what am I feeling and why? Because there's not that much pressure, right? Home Depot on Saturday, yeah, you're going to be later than your wife wanted you to be, but it's not like losing $1,000 or $5,000 or whatever. I did have a really, really, really good trader who made hundreds of millions of dollars once take a break and say he was more anxious. And he wanted me to help him figure out why he was more anxious not trading. And it was that he was afraid he would get his 5 kids to school on time and his wife would be so mad she'd kill him. We did that by going, what's the prediction? What's the prediction? What's the prediction? What's the prediction? And then he burst out laughing and go, okay, she's going to be mad, but she's not going to murder me. And tomorrow I'll start earlier. But it's practice knowing what you're feeling and why. What is a little bit more important than why? But then like very specifically saying, okay, I worried about this, whatever this is. Is that about what the market's going to do? Or is that about what's going to happen to my P&L? If you think about it, every person who interacts with the market over their lifetime would definitely make more money if every decision they made was actually about the market, as opposed to their P&L, what's going to happen to them, whatever. They're going to miss out, which again is what's going to happen to them. So with my professional clients who tend to get paid on their P&L as of December 31st, I'll say like, look, if I can have my way about it, every decision you ever made will be about the market. But realistically, come this time of year, you're going to start thinking about the paycheck if you haven't already. So let's just be honest and conscious about it and go, you know what? I'm not going to make that trade bigger. I'm not going to take that risk because I want the paycheck. So at least you're not. What that does is it prevents like regret. You know, people will not get into something because they won't take the risk because they want to solidify their paycheck. But they don't really know that's why they're doing it. And then 2 weeks, the trade would have worked out. And then they're really frustrated and really mad and they wish they would have been in it and they do something stupid on December 15th. So by being honest, like I'm making a decision about my P&L. Okay, we know that over a lifetime, I'd make more money if I just made it on the market. But right now, I need the P&L, I need the paycheck. So, okay, I'm going to pick my poison. By the way, choosing your flavor of future regret. When that whole billions debacle that I got myself into, which I didn't know I was getting myself into, started, I was on Squawk Box with Andy Rossork, and they asked me like the one thing people could do. I'm like, know what you're afraid of regretting. Fear of future regret. There was a psychologist in Michigan, Janet Landsman, who said this was literally the most significant emotional state in human beings. And if you think about it, if our brain's always predicting what's good for us, we don't want to do the things that caused us to feel bad in the past, right? Something happened, we made a mistake, we wish we wouldn't have done it. The purpose of regret is to make us learn not to do it again. When I lived in Chicago, I could go to what was then Jesse Livermore's, and I could have 4 martinis between 3:30 and 11:30 on a Friday night. I can barely have one now. And if I have to, I'm going to really regret it for like the next 36 hours. So I don't do it. Well, choosing your poison, your future regret, is a very powerful strategy. And anybody can say, okay, I'm predicting I'm going to miss out. I'm going to feel bad. I'm going to stay in the trade, give Mac money, and I'm going to feel bad. I'm going to get out of the trade and not have made money. I'm going to feel bad. Just pick the one you want to pick your flavor of regret, because you'll still regret it. You'll just regret it a little less. And you'll definitely be less compelled to do the next stupid trade to make up for the thing you're regretting. And if you do that, by the way, you can probably cut out at least the worst 5% of your trades. And if you cut out the worst 5% of your trades, how different does your P&L look at the end of the year?
It can make a really big difference.
Because not only do you not lose that money, you don't go through the recovery time, you don't make the next stupid trade. So you've only cut out the worst 5, but it allows you to make the next good trade sooner, simply by navigating regret better, which is a prediction about what's going to happen to you. And in that way, you're using the human brains like you're always predicting what's going to happen to me. You're using it in a way that helps you.
I love it. I love it. So let's change gears kind of a little bit, but still kind of in the same vein. So a lot of traders I know have, well, what I'll lump into the category of ADHD. So let's talk about managing boredom, investing with options like selling overriding covered calls, selling cash cured puts, and or just really in general. What habits keep boredom from morphing into over trading or making trades you shouldn't because, well, there's nothing else to trade. So how about this one?
Yeah, that's a really good question. I mean, I'm going to start with like knowing what your time frame is, right? Then it's literally having other things to do. Dmitry Balyazny, when I sat next to him in Schoenfeld in 1995, 96, 97, used to, in Chicago time, get up at 11 a.m., lie down on the floor, and read a fiction book till 1:30. 2, keep him from doing stupid trades in the middle of the day. He read a book a week, best as I can recall. Like I had another trader who put a punching bag in their office. Now, he did it, but to have something else to do and to work out his frustration over trading. And it worked. Like I have these yellow glasses on because as it turns out, the science says light is our most important nutrient. The light from the screens is bad. Go outside. It's good to get light first thing in the morning, but it's also good to get light periodically through the day. Go walk around the block.
Mm-hmm.
You know, have the whole idea you have to be in the market to make money. You have to take every trade. None of them are true. They're just not true. If you're a surfer and you're sitting out there in the ocean waiting for the wave, you only want to take the good ones. So, okay, the surfers just have to sit there and wait, and at least they get to chit chat with their buddies, like while they're waiting for the wave. So that's probably pretty fun. You're sitting watching your screen by yourself. You need other things to do. And so people will worry, like, if I leave the screen, I'll miss something. Generally, you won't. Like, and you can test that. There's a guy named Hubert Centers was a pretty good trader. Again, I haven't talked to him in 30 years. He used to tell people to get up from their screen, go make a cup of coffee. And this is, by the way, learning intuition also. And ask themselves if they were about to sit back down the screen where the S&Ps are. It's stunning how accurate you can be. And you haven't seen them in 5 minutes. Like, I mean, my husband's fairly ADD-ish. When he has a fidget spinner and it seems to work. Drives me a little crazy if you're watching TV, but I mean, people do impulse trades, right? They see something, they think, oh, that's a good idea, I should do that. Well, is it a good idea? Like, what are the odds it'll make you money? I mean, if the odds are good that it'll make you money, like it's an intuition. Here's the problem as I'm thinking about it. The problem is sometimes when you're not thinking about things, your intuition is better because your subconscious is just reacting to what it sees. So not every trade that you didn't plan per se is bad. Some of them may be good. But you need to know, am I doing this because I want something to do, because I want to feel, more excited, because I feel like, oh my God, the real one is I can't be making money if I'm not in the market.
Mm-hmm.
You also cannot be losing money, and that's maybe more important.
Well, let's talk for a minute about what I call regime changes.
Mm.
Like when a market's, say, trading sideways for a long time, and then all of a sudden, seemingly for no reason, now it's in this solid, prolonged uptrend. And a lot of the traders who trade the things that we talk about a lot, selling option premium in terms of covered calls and cash cure puts, when that regime change happens, it requires a mental switch. And it's really hard, I think, for a lot of traders to make that mental switch. Do you have any insights on how to get your mind to adapt to the new market regime or anything like that?
I'll tell people sometimes, think of what boils down to the speed and rhythm of price action as music. And so it could be classical, it could be like 70s rock and roll, it could be 90s pop, it could be rap. And when you think about it like that, you go, today it's hip hop. Today it's like, I don't know, rock and roll. Today it's classical. Today it's like smooth and, expected. Now, you got to be aware that regime change is possible. And it seems like not everyone is. Like, actually, I left Schoenfeld to go to New York, but my understanding is those 1,000 day traders they had, trading the momentum internet market, very much like this AI market has been, when it turned in 2000, they couldn't make money. Now, my question was always like, it just started going down every day. It's supposed to be going up every day. Why was that really fundamentally any different? It was the same. The direction was just different. But I guess there were so many people there that didn't realize going down every, metaphorically speaking, obviously didn't go down every single day, but it's the same, just turned upside down. The other thing about that is that I've had this conversation with a lot of my clients. You usually don't have to catch the turn. Like, it's really cool if you do, right? And people really want to catch the turn. And why do they really want to catch a turn? It has nothing to do with the amount of money they're going to make. It has to do with, if I'm one of the first people to catch the turn, I'm clearly one of the smartest traders around. And I'm going to feel really good about myself. If you ask yourself that, I've had people who always try to catch the turn every single time. They had a father who told them they had to get A's. They had an older sister who was always smarter than them. They're absolutely trying to prove how smart they are. So that's one of those things. Like if you predict, why am I trying to catch the turn? Oh, because I'll look really smart. Go, huh? Will I really? And how much risk is that? But the other, like a flip side, and I've never thought of this before, but because we're always predicting and because we don't like something that's different than what's made us comfortable, we may not want regime change. I mean, most people, like I have a bunch of energy traders, they're all sick of the choppy energy market they've had this year, and they're all sitting around waiting for it to change. And they keep shorting oil and it keeps not really going down. I mean, it's starting to go down now, but part of the reason it was being held up for so long is everybody was short and they kept having to cover, because all these people were trying to be in before the turn. But why? Like most of the time, particularly if you're going into a major trend, you get 1, 2, 3 really good opportunities to get in, or really good to good enough. So, okay, maybe you want to prove you're smart. You're also afraid you'll miss it. If I don't get in right at the turn, I'm never going to be able to get in. That's the prediction people make. Maybe. I mean, one thing I realized very early on was you didn't need to get the bottom or the top. You just need to get like the middle 60 to 70%. If you did that, you were killing it.
Yeah.
I don't know if I really answered the question, but it's a good question. It's a really good question.
Yeah. So if there is one practice or routine you think an investor or trader should start working on in their lives every day, what do you think that would be?
Asking themselves, what am I feeling and why? Without any judgment. You cannot, no version of I shouldn't feel this way. You feel how you feel. And then put it in 2 categories. Is the feeling about what's going to happen to me? Or is it about the problem at hand? And in this case, it's trade and it's the market. And if you do that, it may be hard to know. Like you may be someone who's really pushed your feelings aside your whole life. And so then you got to practice. You got to practice at Home Depot, at the grocery store, during your golf game. By the way, that client, that Asian client who has a hard time accessing his feelings, he was traveling. He's quite a good golfer. He was traveling. I don't remember what country he was in. He had not taken his golf clubs. Some other big hedge fund muckety muck said, why don't you come to my club and play golf? He's like, I don't have clubs. They're like, that's okay. We rent nice clubs. So he's like, okay. And he decided because, he had this rental set of clubs that he was going to try this intuition thing. And so what he did was he said he just like looked at the shot and the first club that came to mind he used. He had the best score of his life. Because he had all this pattern recognition about the slope of that sand over there in the distance. He was dumbfounded. He also, that same person, went to the Masters this past year, got to talk to Rory McIlroy's putting coach. And what he told me that Rory McIlroy's putting coach said was, what I work on with him all the time is trying to get him to putt only by feel. So what am I feeling and why? Is it about the market or not? And practicing, do I have a sense of something? Grilling the steaks, putting the ball, name a field. And know that number one, if you're working on what's the unconscious or what are you predicting about yourself, you really are the cutting edge of neuroscience. And you're really working with the whole psyche, mind, body, the way it actually does work. It's not that I'm so smart. It's that I was interested and I've been going down the path. And frankly, I wasn't raised where I had to conform to like a family system or a religious system. I was pretty much on my own. So I was never like afraid of bucking the trend. When I first spoke at the Chicago Mercantile Exchange in 2005, I got a call from a professor at Northwestern saying, I can't believe you just got up and told 250 men they have to listen to their feelings. It's like, well, they do. They do. Like, I don't need all 250. I hope that, they don't tomato me or whatever. And what ended up happening is people started coming up to me going, I've been doing this. I just didn't want to tell anybody. I thought this was true, but I wouldn't admit it. My point is, you're actually working with like a much closer reality as to how human beings operate, honestly. And I only know it because I was interested in The one more story. When I was back in that first electronic trading group, there was a guy named Steve Himmelman who was at the SIBO in the 80s and 90s. I've been reading all the trading psychology, taking emotions out of controlling emotion, blah, 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 blah. There's 18, 19 guys and me in this office. The guy that was making the most money was Himmelman. He used to jump up and down and scream and cuss and yell and pound his desk. I mean, he was by far the most emotional person in there. And I'd be like reading the book, take the emotion out of it and going, but why does Steve make the most money? But what he was doing was that emotion differentiation and granularity and feeling his emotions and putting his emotions into words, which reduced the chance that he actually took the trade acting out the emotion. I mean, he had his moments where he did do that. Like he used to do merger arbitrage where he lost a bunch of money like by getting stubborn. But generally speaking, day to day, he was feeling his emotions and talking about them. And so the chances that he was doing them, because that's the other point. You're either going to feel them or you're going to do them. And you only want to do the ones that are actually true intuition and confidence in how a pattern's going to play out.
Denise, this was wonderful. I wish I could talk to you for another couple of hours, lay on your couch maybe. But thank you so much for sharing your time with our listeners here. I really, really appreciate it.
Oh, thanks for having me. No, it's an honor to be here.
And that about wraps it up for this show. But before you go, please make sure you're subscribed on your favorite podcast platform, whether it's Spotify, Apple Podcasts, or whatever it may be. And would you please be so kind as to leave a comment? I'd love to hear your feedback. I would surely appreciate it. Until next time, invest excellently.
Options involve risk and are not suitable for all investors. Before buying or selling an option, read characteristics and risks of standardized options. A link is provided in the show notes. To learn more about your host, Dan Passarelli, please visit markettaker.com.